we're getting a few more details on that potential mega media merger tonight. Sources telling Dow Jones that Discovery Communications and Scripps Networks Interactive are in talks to combine. Joining me now to discuss is Ken Mahoney, the president of Mahoney Asset Management and author of A GPS for Your Retirement. Ken, welcome to the show. What do you make of it? This has happened before where they've talked about merging, getting together back in 2014. Here we are again.
Right.
Why?
You know, these are two solid brands, but there's so many disruptors in the cable business, right? People are cutting the cord, and like you feel like you need a dance partner now to kind of compete. I mean, Netflix, a huge disruptor. We saw their earnings and its subscriptions today. So cable companies are going to start looking for dance partners to be able to kind of get some economies of scale and try to do something with that.
I want to talk a little bit about the company or the channels involved here, because no doubt you at home have seen all these channels. Discovery is Discovery, TLC, Animal Planet, Sci-Fi, Velocity, and Scripps Networks, HGTV, Food Network, Travel, DIY, Cooking Channel, on and on it goes. It seems sort of like a perfect marriage. If you bring those two together, does that give them more the power of scale? Will this make them a bigger player that will be able to
pricing
succeed?
power with that, right? I mean, those are great brands you just mentioned. HGTV, we watch it all the time, right? But there's so many good things with this merger, and it makes a lot of sense. In fact, both stocks are up in after hours. Now, a lot of times you see mergers, one stock is up, one stock is down, and there's always something critical about it. But at least right now, the market in after hours is really liking the merger because it's lifting both stocks at the same time.
You know, I can't get over those Netflix earnings from last night. I'm still thinking about that. You know, people say, you know, it's over for American companies. You look at Netflix, it ain't over, not by a long shot. And my understanding is that NASDAQ hit a new high today, largely on the backs of those earnings.
Yeah.
Is it as good as it looks? What are the pressures on that company going forward?
Yeah, so it's 8 days in a row for the NASDAQ, which is great. But Netflix, I don't know, they're really disruptors. When you kind of look through it, they added 5 million subscribers in one quarter. Worldwide, over 100 million subscribers. And a lot of the data comes out that this new program, original program they have, is attracting viewership. So they're really competing head to head with the networks now when they have their own original programming.
They're up 13% today. And
yes.
You know what? They're spending 3 times as much as HBO on original programming. They're spending $6 billion this year. It's big dollars, big money.
They're getting that investment return, obviously, with those type of numbers. So that's nice.
So a bad story. So we talked about the happy story in the market. Now we have to talk about Chipotle.
Yes.
Yet again, here we are. People getting sick on Chipotle food. What's going on?
You know, it's hard. The first time through, I think you can get through it. You get the publicity in front of it, and you talk about it. But when it happens again, it's a really difficult thing to kind of overcome. I know they'll be out there and they'll be spinning it, but it really is a difficult environment for them.
We're looking at the stock chart right now, and it's just abysmal. It's a really sad story. And I think it's come to a point now where, you know, their very loyal audience is saying, maybe not, right?
Yeah, they're really going to do a lot of publicity in front of this, promotions, and, you know, remind the public that they're eating safe food. That's the number one thing. And consumers have a lot of choices now. There's so many Chipotle-like restaurants out there that are fast food and quality. So they really have their work cut out for them.
Yeah, I think that really ratcheting up the heat on people who are doing the same kind of business. You look at the markets every single day, and you know, one of the wonderful things of the past few months has been that it's gone up, up, up. What will propel it as we come into the second half? We're in the second half of the year already, but into third and fourth quarters. Typically tough times for the market. What do you see?
Yeah, October could always be spooky, no pun intended. But I think Janet Yellen laid out a pretty good case last week, right? She said pretty much we have this Goldilocks environment, not too hot to have to raise rates, you know, too dramatically, you know, kind of this gradual approach, and not too cold for corporate earnings. So I think last week, when you look at the turn of the market and kind of this breakout for last week, a lot of them came off the words of Chair Janet Yellen and this kind of Goldilocks environment, not too hot, not too cold. Pretty good environment for corporate earnings, to tell you the truth.
Well, good environment, but I want to bring up one more stock here, and that's IBM, because they reported after the bell, and they missed. And this is a stock that I would think that a lot of our viewers might hold.
Sure.
Buy, sell, or hold?
Sell. I mean, they keep missing. They keep missing. I don't know why we're waiting around. When you just told the story about Netflix, now it's always hard to jump on a train when the stock's going higher. But for some reason, I like to see accelerating earnings, and IBM quarter after quarter is disappointing. Big Blue is you know, really disappointing on investors.
It's the blue of depression now, I
think. I was looking at your color and trying to say that. But yeah, it's Big Blue for sure. Yeah, it's disappointing investors.
Thank you so much.